Hello guys, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari. And today we finally have a correction of those movements that we saw from the beginning of the week. Once the weekend ended, we woke up with huge gaps, and that movements on stocks, on gold, on currencies. This movement continued for 2 days, Monday and Tuesday, and now on Wednesday we do have corrections on most of the instruments, apart from the oil, which is going down, still going down as it was last week, as it was on Friday and on Monday. But on stocks and on currencies, on gold, etc., we do have corrections. So traders are taking profits from those movements. First, let me show you the calendar, and obviously we will talk a bit about fundamentals. From the fundamental point of view, I think we already digested the French elections, and now the biggest topic is corporate tax plan, which apparently we are about to find out more today. Today, apparently, Donald Trump will be talking about in a greater detail. So that upswing on stocks. Oh, I told you that we do have a correction here, but that upswing on stocks on Monday and Tuesday was additionally driven by those expectations about the tax plan proposed by Donald Trump. Well, it will be important what we will hear today, obviously, but remember that it's still this plan from Donald Trump still need to be passed. Still need to be accepted by the Congress, and we all know what happened with the Obamacare, with the healthcare bill, that even if we will have a very nice idea from Donald Trump, it does not it's not so clear that it will be passed by the Congress. Actually, the chance of that is rather limited, but obviously we will see. So what it can happen, we can get a huge reaction on the market after this will be proposed, but then traders will think if it will go through or not. Apart from that, what do we have here today? As you can see, not much. Retail sales data from Canada and Mexico, not very important in terms of the influence on the market. We have an important data for the oil market, EIA crude oil stocks change. Oil is going down sharply, so traders will look for every single good information that can help to stop this huge downswing. Even slightly better data, I don't think it can happen. Maybe better data will cause take profit actions, but I don't think this data can revert the current sentiment on oil, especially as you can see the previous data was minus 1 million, and the consensus is we are about to see minus 1 million, 1.6 million, so we're about to see a decline, and if we are expecting a bigger decline, that can be we can have a negative surprise here. So we can have another build, a higher number, a positive number, which will be a disaster. Maybe not a disaster because oil is already in a very bad condition, but it will just prove that the current sentiment on oil is backed by the fundamentals. What we should wait for is tomorrow, Thursday, we start with the interest rate decision from Japan, press conference as well, the same from Eurozone, and we will finish with durable good orders from United States and data from the job market. So tomorrow, yes, tomorrow, Thursday will be very good in terms of the calendar. But on Wednesday not so much. So most probably today's movement will be all about technical correction of those swings from Monday and Tuesday, and I wouldn't be surprised if we would finish like that with corrections of the recent movements. But okay, let me show you the charts. Euro dollar, as you can see, opening of the week. Then they tried to close the gap, but they stopped on the first horizontal support here. This support was defended, and the price went higher yesterday. And today we do have a correction of this movement. Maybe we will try to test this support one more time. Actually, about euro dollar is that's all. It's not very interesting to trade on euro dollar. Right now, not much happens. Let me show you British pound to American dollar. It's much more interesting. Why is that? Because we have perfect correction here. This very flat correction. It's a rectangle on a very important resistance. And from the price action point of view, I always tell you, that such a flat correction on important resistance is a good occasion to buy, at least in my opinion. Well, not only in my opinion, but from the price action point of view. That you do not see a retracement here. You do not see a bearish reaction. What you see here is just traders anticipating a further breakout. It's a very interesting setup. As you can see, we retraced only 38.2% of the recent upswing. That happened after UK Prime Minister told us about earlier elections in UK. We retraced exactly 38.2, which is pretty significant. And this kind of setup is just a good invitation for a further upswing. It looks very promising. Euro to British pound, as you can see, we also do have a correction of that upswing seen on Monday and Tuesday. British pound is very strong, so this correction should be deeper, and it is deeper because, as you can see, we broke a horizontal support here, a very important one. So it's the support here. After the breakout, it became resistance here, and a support just overnight. As long as we stay below this horizontal resistance, the sentiment, short-term sentiment, is negative. Once we will come back above, it will be changed into a short-term positive signal. So this horizontal resistance now, it's kind of a benchmark for us right now for the short-term situation. But in the long term, I do think that we should see a gap closing movement here. How big was this gap? Now 120 pips. So I do think that we should close it. Maybe not this week, maybe not the next one, but in May, most probably. Euro to Japanese yen. Here, as you can see, this upswing was much stronger. Why is that? Because in addition to that, we had an escape from safe haven assets. Japanese yen is a safe haven asset. So we had a combination of very strong euro and very weak yen. Here we had, for example, a combination of strong euro and a strong pound. So it does not look so good. But here on euro to Japanese yen, it looks very good for buyers, and now we are 440 pips from the gap. We are even higher than this week started, 76 pips higher. So this sentiment here is definitely positive. But look what's happening here. The place where we stopped is not a surprise, right? It's not a coincidence that we stopped here, because it's a dynamic resistance created by connecting recent lower highs starting in December. As you can see, middle of December, end of December, then we do have end of January, middle of March, and now this dynamic resistance is stopping us from going north. Right, so sentiment is definitely positive. In the short term, we can have a small bearish correction where many investors can open long positions according with the trend. Euro to Australian dollar here also very positive. It all started with this false breakout that you were aware of, where the price was here. So we are telling you about this false breakout 400 pips ago. That is usually a positive sign for buyers. Obviously, in addition to that, we had French elections, which helped a lot here. But anyway, here we just had a combination of a technical signal and a fundamental signal, and it's always the best way to combine those two, technicals and fundamentals, together when they come together, because it's not very often that they come together, but if they come together, it would be nice to enter the market. American dollar to Swiss franc, still waiting, not much is happening here. My base scenario here is the price bouncing from this horizontal support here, creating a right shoulder, breaking the upper line of the flag and advancing higher to this resistance, right? This is my bearish scenario. That would be a nice flag, one formation, one flag, also inverse head and shoulder formation, so it would be very good to see that. Gold stopped on a very important combination of two supports. So what do we have here is a horizontal one. Here, $1,262 per ounce, and what do we have here is a dynamic resistance created by a midterm uptrend line. Here we can see that, well, we got a reaction, we got a $5 reaction, so traders are respecting this level, but as you can see now we're struggling to hold the price on high levels. Now we can see that there's a willingness to break this support, but as long as we stay above, it's kind of a good occasion for the midterm buyers, although the bounce is not the prettiest one in the world. But still, from the price action point of view, what's happening, we are above this horizontal support, dynamic support. We're in an uptrend in this time frame, so that's an invitation to go long. But even, you know, I'm very optimistic on gold in the long term, and even I'm bullish. I'm not so convinced about this setup here in the midterm. Even though that I'm in general bullish, I'm not convinced right here, right now. So maybe it gives you a hint that it's not so good. This buying opportunity is not so good as it's supposed to be to open a position. As we are talking about gold, let's see, silver also tried to bounce here, but without success, and most probably they will challenge the closest support here, which is a line connecting the bottom of the head and the bottom of the right shoulder. This is the closest support. One here, the horizontal one was broken. The trend line was broken as well, so the situation on silver is a bit disappointing, especially that we thought that silver will be a bit stronger than gold, but it's not. Silver is weaker than gold. But maybe it will change Here so far there's no buy signal here on the silver whatsoever, so it's additionally bearish factor to the potential long position on gold, right? Because usually those instruments are correlated. If there would be a buy signal on silver, that would be an additional plus for buy signal on gold. But this strength of this buy signal on gold is limited, is not very promising. And it's another way to show that. And this way is, it's another way to show the weakness of the buy signal on gold. I mean the bad situation on silver. Next instrument I have for you is Australian dollar to New Zealand dollar, where we broke the upper line of the flag. It's very optimistic. I showed you that yesterday with this candlestick, and what do we have today is the next daily candle, which is making higher highs and higher lows, which from the price action point of view is very positive for the buyers. And it's a good sign that after the breakout, the next candlestick is making higher highs and higher lows. That's what you should be looking for, where when you're going for the breakout, because if the next candle is making, in case of a bullish breakout, if the next candlestick is making higher highs and higher lows, it increases the chances for a success, right? If the next candle is inside bar, it can mean that this can be a false breakout, but in this case it looks promising, it looks right, it looks sustainable, it looks like this upswing will be continued, even if we will have a correction. I think the correction, the deepest we can go is the neckline here. So this horizontal support here, even if we will have a correction, we can bounce here, create an inverse head and shoulder formation, and from this point the price can skyrocket. But obviously we do not need this correction, we can have it, but the price can go up like here, right? This is British pound to Canadian dollar, which I'm personally in love with. Why is that? Because it's our setup. It was our setup here at the beginning of the year with this bullish engulfing on a weekly chart. The beginning of the year, in the second week of January, we told you about the long-term buy signal here. Not only about the, it was about the bullish engulfing, but about the double bottom. And the second bottom was created by a bullish engulfing, so a strong buy signal. Strong buy signal, and you can see that after a few weeks of a sideways trend, finally we got an upswing with help from the fundamental point of view, from the fundamental side. But hey, sometimes you need a trigger, you need a little push from the fundamental point of view for the technical analysis to work. It's how it is. We got a wedge here, trend continuation pattern. We broke the upper line of the wedge, then Theresa May came with help. Then we got a sideways trend, an upswing, and we are on a very important resistance here, right? I hope you can see it's important. So this can be a trigger for a reversal, but not a major reversal. I mean, for a take profit action. This can be a trigger for a take profit action. The price from this point can have a small downswing, but in general, what we should expect is a bullish breakout of this resistance along with the trend. And one of my personal favorites, it's American dollar to Polish zloty. What I'm missing here is the 4,500 pips movement, and you know that because I'm showing you that for a long time. So far, 4,100, almost 4,200, right? I'm missing here. I want to see 300 pips more, and that will be beautiful. But maybe it's a kind of a left shoulder now, maybe we'll have a head and a right shoulder, we will see. But I personally like what I'm seeing here, this strong downswing with a potential good buying opportunity here, but obviously we have to wait and see, because you don't buy just by the fact that the price got there, but you would like to see kind of a bullish reaction on this level, right? Only the fact that the price is there is not giving you the reason to buy, but a bullish reaction there, bullish reaction and a support gives you that. Australian dollar to American dollar here, well, we can see that Australian dollar and Australian dollar to American dollar is highly correlated with gold. Now we can see that American dollar is a bit stronger as we speak. We can see that on most of the instruments here on gold as well. Australian dollar to American dollar is under the pressure. Here is a very important horizontal support. If the support will be broken, that will mean a mid-term, short-term sell signal. Actually, for that instrument, it's their last hope now. New Zealand dollar to American dollar also are above important horizontal support here. We created this rectangle to show you a good place for a bounce, and it actually happened, so we can remove that. And this X shows you a good place for a sell stop order. I wouldn't go with a sell stop order now, so maybe I will delete it, because after such a strong drop, I don't think that sellers will be able to pull price even lower, to push price even lower. What I would like to see, for example, is a bounce, downswing, bounce, downswing, bounce, smaller bounce, and a further downswing, because such a strong swings like to have corrections, right? They like to have corrections before breaking important support. If they won't have a strong correction before breaking a support, that can result with a false breakout, right? So it's not a good situation right now, although it may look promising. Euro to New Zealand dollar. Here, what you can see is a potential for a trend reversal. Why is that? Left shoulder, head, and right shoulder. We broke the neckline, and we are about to break important horizontal resistance. If we will be able to break it, upswing here is open. We can have a further upswing. It looks promising, yes. Euro to New Zealand dollar looks promising. American dollar to Japanese yen. What we are having here is a retracement. There are very high chances that we will get to this resistance. It's 40 pips, so it's actually nothing. But in the long term, it would be nice to see the price here. Let me, for example, measure this correction. Okay, like that. That would be, in addition to that would be a correction equality movement, right? If the price would get here to this resistance, that will be a good selling opportunity. Okay, now let me show you what's happening on stocks and on this oil. Is also very important. Okay, S&P 500, as you can see, after the breakout of the upper line of the wedge formation, which is very bullish. Next candlestick from yesterday makes higher highs and higher lows, and that's what I said when I was talking about currencies today, that when the price after the breakout, bullish breakout, is making higher highs and higher lows, the next one after the breakout, it's promising. It's an optimistic setup, and traders can follow that, even if we will have a small correction here, but still it looks good. I think we have to adjust this trend line here or you can do something like that. Looks more appropriate. DAX also, DAX is having quite a nice support here. Maybe they would like to use this, but still they have a huge gap to be closed. I don't think it's gonna happen now. Maybe you know what they what they say about May on stocks. Sell in May and go away. That's what they say, that most of the corrections, they do happen in May. That's what traders do believe in. So maybe this gap will be closed in May. And oil. Oil is beautiful. Look what I spotted yesterday. Well, we were talking about that on our daily analytical report. Ups, downswing, bigger correction, smaller correction, breakout. Downswing, bigger correction, smaller correction. We got a kind of a breakout, but it was kind of a false breakout, right? Now we're having another try, but those two setups were very, very similar. I like that. It's good that we didn't open a sell stop order, but generally, well, I have to tell you that a few years ago I was trying my luck with pending orders for breakouts, and no, too many losses, too many false breakouts. It's not the best way to trade. I switched to for trades kind of a sell buy limit orders, but I trade using market execution. I'm not using pending orders, but with this kind of approach. So I don't like breakouts, I like bounces from supports or resistances, right? With the trend. So that is why I don't like situations like that, because if I would have a sell stop order like here, that would end up with a stop loss order. But you can see that the pressure on the oil price is very high, and traders are pushing lower. We will see. If you trade on oil, be aware of the data today. Be aware that anytime you can have a jawboning from OPEC members, etc., about the possibility of cuts, extensions, bigger agreement, etc., etc. You just have to be prepared for that, because they will try that first before making an action. They will try verbal interventions, but you see what's happening with the trends based on false expectations. That bounce here was based on the false expectations that we'll have an extension in OPEC agreement. We had some positive comments that maybe we will, etc., etc., but it was verified by the reality, and the reality was brutal for them, right? So that's how the situation looks like. Okay, guys, now we will have a short break and a webinar about fundamental analysis. Remember that trading and investment in financial markets involves an element of, do not forget about that.